Time now for Better Money with Joel Johnson. Today we're talking about the effect a volatile market has on a 401k. Joel is a certified financial planner and managing partner at Johnson Brunetti, and certainly we've been seeing a volatile market, and so a lot of people worry about what do I do with my 401k.
People get worried, they make the wrong decisions at the wrong time, so we're going to talk about what not to do and what to do when it comes to your 401k, your retirement savings.
Okay, so the first thing you need to think about is the funds available, and you don't necessarily mean the amount of money in your 401k, you mean what can you invest in?
What are the choices within your 401k? Some people have 100 choices literally inside their 401k. Others, like our 401k at our company, people have 12 different choices. So what are the funds available? What are the choices available? And then what can you learn about those different funds within your 401k that you can allocate your money to?
So you make that's where you're making that plan. How much is going to go in stocks? How much is going to go in bonds? How much is maybe going into your personal company stock? So you want a percent of your portfolio allocated to those funds.
Correct. What percentage of your portfolio is allocated to each fund? If you have a real aggressive growth fund that did great over the last 2 years, you probably do not want to put 100% of your money into it, because sooner or later that one isn't going to do good as the other one. And so you want to make sure you've got your money spread between different funds. That's what we mean by asset allocation.
Okay, and what about your retirement date?
Yeah, this is really a big deal. People don't think about their retirement date. If you're going to retire in 3 years, you should be erring on the side of safety. You don't want to give back the money you've earned in your 401k. If you've got 20 or 30 years, you should probably be pretty darn aggressive with those fund choices.
Okay, and changing your contributions, maybe you need to make some changes. Yeah,
we always tell people increase as much as you can. Chances are 6 months from now, you will not notice if you take some money out of your paycheck and put it into that retirement plan. The target, Kara, is 10 to 15% right off the top of your income. It sounds like a really big deal, but most of the time when we get people to go up to that 15% level, 6 months from now, they don't miss it.
They don't miss it. Okay. And I've heard also if you're getting a raise, go ahead and put that raise into the 401k.
That's a great plan.
Because it wasn't money you were used to anyway.
Right, exactly.
But
exactly.
It sounds like more fun to keep it. Okay.
It does, yeah.
All right, number 5, letting emotions guide your decision, which is maybe why you shouldn't let your emotions guide your decisions.
Right. I mean, this is the biggest impediment to any success in investing, which is what are we going to do when fear takes over or when greed takes over. Fear means we're worried the market's going to keep going down. We see our retirement going away, so we either stop contributing to the 401k or we stop saving anywhere else, or we start selling stocks when they're low. Greed is we're afraid of missing out, so we start buying things, especially aggressive stocks, when the market's gone up. Riskier stocks always do better when the market's going up, so there's that huge temptation to put our money into the riskier stuff, and then when the market turns on us, we lose much more than we should have.
Okay, so you want to have a good plan, and you want to understand these market corrections because they're really part of investing. So to get a better handle on that, you have a free offer for folks, and they can get a booklet here that's Understanding Market Corrections.
Yeah, it's a great booklet. It's got wonderful wisdom that's written in plain English about what to do when there's market corrections, how to act, how not to act, so you don't blow up your retirement, so to speak.
All righty, and you can get that for free by going to bettermoneytv.com. You'll find Joel's free offer there. Thanks so much, Joel.
Great to be here again, Kara.
That's Better Money.